Why do you say sell sterling?
Well, because in reality, the sterling performance will depend on the policy response to the better than expected data. The data has been improving, and chances are now that the UK economy could actually better than the BOE is expecting at the moment. And mind you, BOE's forecast of 1.3% year-on-year growth this year is above what the market is expecting. So there is a scope for a positive surprise and presumably for sterling outperformance. All that said, what we also have to see is that the BOE is also willing to step away from stimulus, from forward guidance, all that. So effectively to be a bit less dovish from here to see sterling outperforming. And I guess that may not be the case for the time being.
Yeah. Why would that not be the case? Is that because they don't want to choke off the recovery too soon?
Presumably, yeah. They still maintain that the view is that the recovery remains weak by historic standards, and indeed they don't want to see rates, money market rates, backing up too quickly, too aggressively, because the risk is precisely that it may derail the recovery.
But Carney, he has a conundrum, he has a problem. I mean, it's a nice problem to have, but he's pledged forward guidance. He said the backup in market rates is unwarranted, yet all this data suggests that maybe the backup in market rates is warranted.
Well, to a degree, really. I mean, depends how you want to view the pickup in the housing market recovery and all that, and whether that could be indeed seen as an alternative to that previous path towards recovery based on rebalancing weaker sterling export-driven growth. Because in reality, fact is that the UK is still the developed economy with the highest share of private debt to GDP. So presumably hoping that households will want now to leverage buy more houses and presumably drive that really pushing to more supporting the recovery on the back of positive wealth effects and stronger consumption, may be asking too much, especially given the amount of debt in the economy. So I guess the BOE may want to take it a bit more slowly from here, just maybe see how the recovery goes, how sustainable it is. And from that point of view, I guess where I see the risk now is that, because you mentioned really, the BOE is so successful in verbally intervening in the rate markets, just by indicating they have this powerful tool, forward guidance, they were able to push rates lower. Now the question is, will they want to keep their powder dry?
Now, you would suggest selling euro sterling, if not now, then if there's a move up towards 89?
Yeah, 89 would be rather extreme. Already, it seems that euro sterling has run well ahead of fundamentals. Fair value seems to be closer to 86. So I would be tempted to sell now, but certainly mindful of the risks going into the inflation report next week. I would wait up. Maybe there'll be better selling levels. 89 certainly would look like an outright sell to me in euro sterling. And I guess the picture looks somewhat different in the case of cable, because there we have to really have the combination of the UK recovery but also the US economic resilience that's been gaining momentum for some time now. And from that point of view, I would still be selling rallies in cable. I think 150 could be still a reasonable target despite the improvement in the UK data and because we expect the US data to improve from here. Yeah.